Welcome to Market Thoughts for January 18th. You and I are already halfway through the longest month of the year. I'm Dave with Lighthouse. Let's get into what happened this week. But first, it's finally upon us. What matters when you market? Our seventh annual client summit, January 21st, 2026. You've been hearing about it. You know this incredible speaker lineup. You know the unique stuff you're going to hear. You know how it's going to help shape your upcoming year. If you haven't RSVP'd already, we still want to see you there. We'll see you there on the 21st. The other benefit of that being upon us is this is going to be a short Market Thoughts this week because Andrew's going to take you a lot deeper on Wednesday, just 3 days from now. So we're going to just tease some of the main important points from this past week, and then we're going to get on with our lives. All right. Looking at weekly changes, here's what happened. Had to change the scale on the chart a little bit. March corn ended up losing 21 cents on the week. Actually, that is after falling all the way to 417. At one point, you were down 28 cents on the week. You know why? We'll talk about it in a second. But if we look at this chart and just expand it here a little bit, this fits pretty well with our narrative that goes all the way back to last August. We said then that we were going to fill this gap on the corn chart coming off our lows and our buy signal, but that we wouldn't trade meaningfully higher than it. We got a few cents higher. We had this sell signal on Christmas Eve. Remember that one? We wanted to be sellers of corn there. We took another stab here just ahead of the report. Then, of course, we had the bearish report, knocked us all the way back down. So far, though, this post-report price action has been pretty encouraging, if you will. This was probably overdone a bit. It was bearish report, but it wasn't that extremely bearish. And then you've had 4 days of consolidating and now a nice bounce on Friday. Let's take a look at soybeans. I keep forgetting to update this here. We got to switch over to January to get to watch me type for a couple seconds. Here's what happened to March beans. They actually ended up only down 4 3/4 cents on the week. The WASDE report, of course, wasn't nearly as bearish for beans. They still took it a little bit tough, obviously in concert and sympathy with corn, but then 3 days of rally. We'll talk about why here, but you had post WASDE report, biofuel story that was perceived as supportive, and a few other things that are still just helping beans. So beans are actually back. This actually looks pretty encouraging on this soybean chart. You've got essentially what amounts to a double bottom here. Pretty good correction from this high. Remember the strong sell signals up here. Remember the head and shoulders pattern. And right about here is when we talked about how you had every single traditional tech as well as quantitative analytics saying beans were going to fall. They did in fact fall. And now you've actually kind of got to what would make a lot of sense to just stop and start recovering. And that chart fits pretty good with it. And then there's wheat. Oh, let's not show that. That won't help our feelings any. Here's your March wheat chart. Here's how it looks on the weekly chart. Pretty underwhelming. Lost 2.5 cents on the week. This is not particularly helpful either. You actually did slide down and make officially new contract lows here on Friday. You're covered some into the close, but you can see just yet another textbook downtrend. And this wheat example, and we haven't done the best with it even on Lighthouse's end, how mediocre the fundamentals are. This was a sell signal on wheat, and the price was terrible. And in hindsight, a guy should have been a more active seller in here because the price is even more terrible now. That said, we'll talk on analytics in a minute. We still fit with the idea that you find pretty good support here at these contract lows, but there's not much for bullish news that would inspire any kind of rally. So here's what happened on WASDE. Worth noting, if you go back and look at the Lighthouse analytics flow, the daily signal update from Friday, the commentary from a week ago today, the first 7 or 8 minutes of it especially, and then the daily signal update Monday ahead of the report. All three of those laid out the compelling case, both fundamentally, primarily centered on the yield data that we have from Crop Profit, and analytically and centered on our signal and gauges, then our new classifier model, that this was going to be a bearish report for corn, which it very much was. Just recapping, we're 6 days post-report. You probably know all this already, and again, we're going to talk through it in more detail, but basically this another 1.25 million harvested corn acres came out of nowhere. That certainly wasn't something we were expecting either. Yield was increased slightly. We did expect that. Nobody else did. And even with some modest demand changes, the combination of the yield being unchanged and then the increase in acres went right to your bottom line here. So you ended up with a 2.27 billion carry out, stocks to use pushed into the mid 13% range instead of that actually came in right at the high end of your trade estimates, well above the average trade estimate. So it was bearish, certainly versus expectations. Soybeans, you cut exports slightly, that caused your carry out to jump from 290 million to 350 million. Officially, that was towards the high end of trade estimates. I have been incredulous on that. I think everybody was expecting that export cut, or they should have been. So it wasn't necessarily bearish to wheat or to soybeans, and wheat itself wasn't especially new bearish. On that WASDE report, it just has already been lingeringly bearish. So also worth noting on corn, big increase in Chinese corn production, somewhat out of left field, and the USDA corn production numbers lag their counterparts in South America on Brazilian corn and Argentine corn. So this whole optimism case we had for potential for a big rally on corn has just taken on a lot of water with this WASDE report. You have both your U.S. and world balance sheets changing pretty significantly in the face of that report. Soybean still looks bullish to us. The U.S. If you take these numbers and plug them into a U.S. balance sheet for next year, it just looks like the market has a lot of work to do to get soybeans to get enough acres and to get the corn back off on acres. So it'll be interesting to see how that plays out ahead. But that U.S. balance sheet looks tight going into next year for soybeans, something that's mildly encouraging. Wheat situation is just unbelievably bearish. Just want to highlight this again, and you'll hear more about this on Wednesday, but these are your major exporters. If you scroll back a year ago, we were talking about how world major exporter stocks to use was the tightest it had been since the big rally in 12-13, and then prior to that, the tightest it had been since the 07-08 $20 spring wheat year, and how we were set for wheat to have a pretty good rally unless everybody had good production. Well, here's how it played out. US, Argentina, Australia, Canada, EU, Russia, Ukraine, you ended up total production jumping 45.5 million metric ton, or roughly 1.7 billion bushel over the growing cycle that encompasses all these major exporters over the last year. You now have the highest stocks to use you've had in a generation going back 16 years, and you have record global major exporter production by just a huge margin. So just this is ugly on wheat. This is why wheat is nowhere near break even right now. The market needs less wheat in the world. It needs you to be below break even and losing money. So just something to keep in the back of our minds, unfortunately. All right, so we're going to wrap this up and get out of here, but let's just run through analytics first here. So here's, as always, it's the next trade, and not just a catchphrase for our new short video series, but it's literally the thought, the methodology. So whether you sold enough corn or not ahead of the report, the damage was done immediately, like always on the report day. And now here's where you land. You hit the buy signal on March corn Thursday. You bounced a little bit into Friday, but you run a buy signal Thursday. Everything but price to stocks to use is below 50 right now. These are analytics that don't support hedging today. We'll talk about where to hedge corn next, certainly this Wednesday and as we unpack this further, but these are analytics that say don't hedge corn. If we look at soybean signal has been rallying alongside board rallying. The trend actually just turned higher on Friday as well, but you're still only at about a signal of 56, and your market gauges are very low. Spec net buying's at 50, the other ones are below 50. So with a higher trend and with a fundamental story behind it, beans are not even close yet either to where we would get excited about selling them. And then there's wheat. Wheat doesn't have the fundamental story, but you've got signal at 33 and all of your market gauges at 36 or lower. So this is also an analytics view that doesn't support selling wheat. Again, it's not so much selling it today, it's on that next bounce. That this was 580 wheat, this was 590 wheat. We'll have to just be mindful of. But wheat, that's probably the only redeeming thing in wheat. We've certainly discounted this bearish news. We're at almost a buy signal. We don't think there's a lot more downside. It's just really tough to see upside. But with that, let's get out of here. We'll see everyone on Wednesday. We'll unpack it further. Very much looking forward to it.